Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. We are looking at the US dollar right now, and it's down against almost everything this year. International stock markets have also outperformed the US, and it's all a result of the tariff war, growing US deficits, and the Fed's inflation fight, among other reasons. So what is the impact of the dollar weakness on Southeast Asian markets? And also, will the dollar strength or dollar weakness continue? Let's check in now with Christopher Wong. He is the client portfolio strategist for Southeast Asia at Fidelity International. Good morning, Christopher. How are you doing these days?
Morning, Ryan. Very well. Thanks for asking.
Great to have you on. Let's talk about what's been playing out for a good part of this year. The dollar trade has been a pretty good one. What's your take on where it's going from here? Are there signs that it will continue, or is it over?
Yeah, so the dollar has kind of broadly appreciated against most major currencies this year. Against the basket of Asian currencies, it's down about 3%. And it's largely been led by a reversal of pretty crowded positions in the US dollars, in US securities, broadly speaking. And there's also been some repatriation of foreign capital as bond yields elsewhere, like in Japan, for example, have become relatively quite attractive. So if this trend stays and if the dollar doesn't appreciate, it should be quite supportive for Asian markets. So it tends to have a inverse relationship with the dollar, right? Weaker dollar tends to be positive for equity markets, for Asian currencies as well. And this bout of weakness also kind of allows central banks in Asia to cut rate, and there's more likely to come as well. All this could support Asian markets. So I think in the short, medium term, there are several factors at play here, right? And on the fringe, we're broadly a bit more neutral, but over the medium term, we could see a further depreciation of the dollar.
Okay, so I'm looking at the dollar index at about 98.65, so year to date down about 9%. What is the flaw in this now? Is there a point where it might just turn around?
It is not impossible, but there are kind of several factors, right? Like I mentioned at play. So the first is, of course, right now there's been a rotation out of U.S. securities, U.S. markets generally to the rest of the world, right? So there's been a general reconsideration of whether the earlier U.S. exceptionalism trade is kind of still valid, right? Whether investors should start to diversify. I think that's one thing at play. And the second thing at play as well is current geopolitics that's happening, right? Wars and whatnot, and there's a general flow a little bit back to the dollar. And third, of course, is where what the Fed is likely to do the next couple of months, right? So at kind of Wednesday's FOMC meeting, I think they held interest rates unchanged. They guided for 2 more potential cuts for this year. But what surprised markets a little bit was them focusing a bit more on inflation over economic growth risk and guiding for maybe lesser cuts in 2026 and 2027. So all this kind of risk is tugging the dollar in 2 different directions. So in the short, medium term, I think we're a bit more neutral for now.
Yeah, there's also a factor about central banks buying more gold than US-denominated assets. And also a lot of conversations are about how folks are moving away from the US dollar. Perhaps in time to come, it won't be the universal currency, so to speak. Do you see that happening? What are the chances of that materializing?
That's the thing for, I think, further down the road, right? But there are several things still at play. I think ultimately it's still one, the reserve currency, right? 2, and it's a major transactional currency in the world, right? And it's not easy to upseat. And honestly, there aren't that many currencies that can immediately take its place. So this is probably something for the more distant future. But yes, central banks are starting to diversify their currency base in their reserves, and gold is one part. So these are different factors that we're continuing to watch out for.
Okay, another part of the equation is how trade has evolved in the sense that it's no longer a global economy of sorts. It's more regional in some cases. Like if you look at the US, trade is being done exclusively with some partners friendly to them. So it's a new fragmentation of sorts. What's the implications of this new scenario?
I think, yes, you're right. So there will be a reordering of supply chains, right? Might be a bit less global, might be a bit more regional. Some people want to be a bit more self-reliant, more domestic-orientated. But ultimately, I think it's going to be a rejig, and it won't be a total end of globalization, right? Because after all, certain regions, certain countries have their own, they have advantages in producing certain goods at lower cost. For example, in Asia, we have the edge in, for example, certain parts of electronics, garments, and the like. So it's unlikely this will really go anywhere else because we do have supply chains, infrastructure in place, a low-cost base. So it's just a general rejig, but definitely I think we might be a bit less global than we were before over time.
Okay, so with that in focus, that shift of sorts, what are the opportunities to look out for in the region at least?
Yeah, so the region, if I could break it into really just two levels. The first is from a valuation standpoint. I think our region is in Asia is relatively cheap to history, cheap to the US, cheap to developed markets, while earnings are relatively stable. So I think that looks attractive. Second level, then we have to look at what, where, and how are we invested. So the areas that look more attractive, or to us, we're leaning more towards areas that are more domestic orientated, which are less affected by external headwinds, geopolitics, tariffs, and the like. So it is really looking at a market level where it's kind of attractive, and two, where are you placing your bet? So for us, it's companies that are more domestically orientated, and a lot of them sit in China, for example, right, where there's a general recovery in the economy. There's a strong kind of impetus to be more self-reliant, to grow the domestic demand, to grow the consumer, etc. So that's where we're finding good opportunities as well.
How about closer to home, like in Indonesia? Would that be on your radar as well?
Yeah, that is something we're looking out for more the medium long term. But at present moment, I think there are a bit of cyclical challenges as well in the economy.
Okay, but also looking at Thailand facing some headwinds. Is this going to see them bounce back, I guess, in the medium to longer term? And I suppose now perhaps a good opportunity to look at it more closely?
Yeah, similarly, I think Thailand's also facing some cyclical headwinds. But that said, if you look at the markets in absolute levels or on valuations, they are at kind of multi-year lows or relative lows. There are quite good opportunities that are starting to emerge in Thailand. So we're starting to kind of take some small positions in some select stocks that are kind of linked to either structural growth areas or, certain areas like medical tourism for the Middle East, etc.
All right. We've been in conversation with Christopher Wong. He is the client portfolio strategist for Southeast Asia at Fidelity International. Chris, thanks so much for your time, and always great chatting with you. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.